Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So what you're looking at now is the actual symbol of the option. Now let's talk for a moment about what the euro-US dollar has been doing. The underlying spot, of course, I know many of you are probably looking at that. How do you capitalize? How do you jump from that spot chart, the fiber, to the EUI symbol? Okay, let's talk about the relationship first. And one of the things I like to do are overlays. Now, if you're a very advanced options trader, I think that you're going to find still there's a lot of benefit to what we're going to talk about here today. And if you're a brand new options trader, I think you're going to find this especially helpful because, again, one of the biggest mistakes I find traders do is that they jump into a vehicle like options without knowing what they're getting into. Okay? So when do you want to utilize options? Let's talk about the when, and then we'll get to the how. For me, I like to what's called shop for options. That's what I call it. I'm a gal. I like to shop, and options are no different. Now, we're always looking for a good bargain. That's always my goal. I want to buy the option for as little premium as possible. I think that oftentimes people get into different kinds of option strategies, which of course have merit. I've learned a lot actually from Steve about a lot of these strategies, but the way I've always done it is, number one, I want to identify those times when a pair like the euro-US dollar or the convention would be the US dollar euro when you're looking at the EUI. But whether it be the euro, the Canada, the British pound, the Aussie, the yen, the Swissy, which are all symbols that I can trade via options through the ISE, I want to know when they're moving sideways, when they're in what's known as an accumulation or distribution cycle. Now, why do I want to know this? Well, if you were to look at an accumulation distribution cycle, and then for those of you that do look at Greeks, you look at the volatility, whether you're looking at the historical volatility directly through the ISE website. And for those of you that have never used the ISE website, please take the time to familiarize yourself with it. I'm not going to slide a window over because that's actually what caused my screen to freeze up in the first place. So if you don't mind, I'm just going to make sure we don't get frozen out again. But what I would recommend you do is head over to www.ise.com/FX. Okay? Now, once you head on over there, what you're going to find is really a chart that you can pull up at the site and pull up things like historical volatility. That's a great objective way to basically confirm what we're going to be doing visually or subjectively on our charts here. Okay, but I highly recommend you check out ise.com/FX. And when you get that chart up, and maybe you can do it as we're doing our talk here, and for example, you type in the EUI. Okay, now what we have here in the overlay is the EUI in the green, blue, and red candles, what I call grab charts. We'll talk about that in a moment. And you'll see the blue and white charts. Look at the inverse relationship. So if you're looking at your spot and you're trying to find out how do I take this analysis that I've done on the euro-US dollar and how do I find a way to capitalize on this EUI symbol? Let's start with that first, because when I finish these talks usually, that's one of the most common questions I get. You know, how do I take my spot analysis and include the ISE options? So you saw that inverse relationship. Now we've gone to the straight euro-US dollar chart again. This is probably where most of you are doing your analysis. You take a look at the historical volatility, and I do remember just a few moments ago Steve was explaining to you what the historical volatility is. Okay, you can look at the historical volatility of the EUI over the past 52 weeks. It's been as low as 7.74 and as high as 22.95. Now, this is an instant personality indicator. Let me talk about this for a moment. Anyone here who has been using any kind of measurement of volatility. Anyone here who's been trading any kind of pair knows every one of them has a personality. If you've been trading the Forex for any length of time, the euro US dollar moves very differently than, say, the British pound US dollar. So when I want to translate that over to the EUI or the BPX, which are the option symbols, I'm going to want to understand what the underlying personality of that market is and what the high and low of that personality is. What does it mean when the EUI is very volatile, and what happens when it's when it's not volatile? So I know a quiet EUI, a very quiet EUI over the past 52 weeks has been 7.74. When it's higher in volatility, it's 22.95. Right now, we're 18.01. So we're kind of on the higher end of it, aren't we? Not the highest end, but on the higher end. Okay? So maybe just above kind of the medium. When I take a look at what's happening with this chart of the euro US dollar, and don't forget, I don't want you to abandon the things that you might be doing very successfully in the market right now. I think a lot of times people abandon what they're doing in the market, and they forget that some of their analysis, whether it be support and resistance, trend lines, chart patterns even, that's one of my favorite ways to look at the market, using chart patterns in terms of the market cycles. I could bring up a platform that shows me the different chart patterns. And the reason I bring that up is because when we have situations where I can be looking at a chart pattern and understand what the current volatility of the market is like. Right now, I could very easily look at the price action and say that the range is beginning to narrow. Take a look at the range through December. Compare that to the range now here in March. Our range is narrowing. Before we even start taking a look at Greeks or any kind of historical volatility, can't you simply look at the chart and start to get an idea visually? It's a little bit more subjective, but visually of what the market is doing. It's quieting down, isn't it? Just a little bit. Now I can take that even to a more zoomed in level and just take a look at the consolidation we saw just 3 trading sessions ago on the euro US dollar. Now I know, and that's one of the great things about doing these talks, I actually trade these options quite actively. And one of the things that I did, and I've told stories about my husband as well, he and I have two it's a great example of 2 powerful ways you can trade options. He likes a top and bottom pick. So he loves to do so with options because it's a very inexpensive way to trade reversal patterns off 52-week highs or lows, or 1-month highs and lows, or try to find a top or bottom within the context of a trend. He loves to step in and do it with options because of that absolute understanding of what the worst case scenario is. His risk management is completely covered. He knows what the worst case scenario is, and he can begin to take what would be perceived as more of an aggressive trade. While me, on the other hand, I like to look for these little quiet times where the market begins to quiet down in what I call cluster or get range bound. You can see there's quite a few times we've done this. And think of it as a coiling spring. As that spring is starting to coil, and the longer that it does coil, the lower the volatility typically gets, and the lower the premium typically gets. And what I will do is I don't hedge, but I begin to look for those setups that I would probably capitalize if I were trading a sideways market. Now, anyone out there right now might have some sort of sideways market approach. I call it momentum trading. That'll be rectangle patterns, narrow channels, triangle patterns, any kind of pattern that I would typically look for a breakout or a breakdown. Ideally, in a breakout or breakdown scenario, we've gone into a sideways market cycle, a sideways consolidation or congestion, and then the market will, as we know, inevitably burst out or burst down.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.